As we're all dealing with the impact of the COVID-19 pandemic, travel restrictions, social distancing and how it could affect our incomes, we are also looking at what it may mean for our money matters, especially when it comes to our mortgages and our KiwiSavers. To look at some of the options and what to consider at this time, we are joined by John Bolton from squirrel.co.nz. Good morning to you, John.
Morning.
Interesting times we're in at the moment, but let's start with I think the one that I think a lot of people are worried about. I mean, what are homeowners worried about? What should we be concerned about?
Cash flow, right? So I guess redundancies are a very real prospect for a number of people. If not that, the better outcome probably is just a reduction in income. So, how do you adjust everything to make that work over what hopefully will be a relatively short period of time?
Exactly.
Yeah, okay, and on that, if your worker's salary or your salary is uncertain and you can't afford to sort out your mortgage, what do you do then?
Yeah, look, there's a heap of options there. So one of the things is that the law actually has quite strong provisions for consumer protection. So it's called hardship, and lenders take it seriously. So I think the key message is, if you think you're going to experience hardship, be proactive about it and get in front of it. Talk to your lenders early. Don't leave it until you're missing payments before you go and start talking to them.
Right.
That's probably the key message. Interest only, so if you've got a mortgage, moving it onto interest only can make a massive difference in terms of cash flow. That could save people $1,000 a month. And
that might be worth thinking about at this time, these shifting sands kind of times we're in at the moment.
Absolutely. And look, I mean, if you go into interest only, you're not going backwards, you're just simply not repaying principal, right? Yeah. So that's, sure, long term, that's not a good strategy.
Can't do it forever, but you can do it short term.
But you can do it short term.
What about if you're on a fixed term mortgage and it's coming up for renewal? What do you need to be thinking about? Because quite good time, isn't it?
Yeah, look, if there's one positive in all of this, it's the really low mortgage rates, right? So, I'm fully expecting to see mortgage rates sort of hovering around 3%, maybe even a bit lower, within the next couple of weeks. You've seen some banks start to move already, and pretty much the rest of the industry will follow. So, look, there's about $15 to $20 billion of mortgages maturing every month. And all of those people are going to get the benefit of moving on to even lower rates, right? And if you think about moving your mortgage onto interest only at the same time, then there's some real cash flow savings there.
Yeah. It's interesting, isn't it? Because I remember I was talking to someone yesterday and they said they remember when they got their first mortgage, it was like 23%. Yeah, crazy, And now we're down to round 3. It's extraordinary.
Yeah.
What if you wanted to borrow some money while the interest rate was low so you can do some renovations? Is that just a no-go zone at the moment? What would be your suggestion there, John?
Yeah, look, I think borrowing money for renovations at the moment is going to be quite hard.
Right.
Because the reality is, anyone that's having a cash flow problem that's asking to borrow money at the moment is going to say it's for renovations.
Right. We've all done that in the past, haven't we? We've all renovated that nice overseas holiday. Yeah. Okay, what about if you're buying a new home? Is there anything you need to consider there?
Yeah, look, that's a very real problem at the moment. In the sense, I think people are probably feeling quite anxious, particularly people that have already purchased but maybe haven't settled yet. There will be a number of people out there that have purchased off plan, and settlements will be in 6, 9, 12 months time, and they're sitting there as we're going into this thinking, what does that mean for me? Yeah. And I guess, there's probably a few things there. The first is that lenders in this environment are actually really good. I know we're quick to beat the banks up about how much money they make and stuff, but having a really good, stable financial system is a huge benefit at moments like this.
This is when they should come into their own.
They do, and they don't tend to knee-jerk react on this. They tend to take a long-term view. Their view is that we will get through this, and on the other side, New Zealand's gonna do really well. So they won't knee-jerk react. You'll find that they'll be really supportive where they can be,
right?
As long as people are sensible.
And keep the communication up. Yeah, get in front of it.
I think that's the main thing, just talk. Yeah. And I think we're sort of saying that across every aspect of our lives, right? It's just talk, be open, be transparent.
Okay, no, that's good. Okay, well, let's talk about KiwiSaver, because, I must admit I've lost quite a few thousand on my KiwiSaver, but I'm not panicking. What would your advice be?
Look, it's a long-term investment. I mean, I think we can't help it. It's like a slow-moving car crash, right? I mean, I check my KiwiSaver every morning and have a little giggle as it goes down.
What does it do for you? Mental health.
Well, I think you just got to see the lighter side of it, right?
That's right.
The thing is that it's not that we're individually making bad decisions because we're all in the same boat. I think that makes it feel a bit better. It's, we're all sharing the pain. But it's a long-term investment. You just really just got to park it and just kind of accept that, it's sitting there for a long time.
Yeah, that's funny because I know a lot of people have looked at their KiwiSavers like you, nine grand down, 20 grand. I am taking the approach of not looking at it at all. I've forgotten the password to get in, but I don't think I need to look at it because I know it's long term. So I'm just going to leave it there and forget about it.
But in these times, John, maybe people look at it to use to get through this tough period. Is that an option, or is that too many bells and whistles to go through?
Look, it might be. I don't know. I think you're going to see a lot of change still come through in terms of, what sort of provisions are given to everyone to get through this. But one of the things that you can do and is really easy to do is just go on a KiwiSaver holiday. So actually stop making payments into your KiwiSaver. So if you think about the two big things that I would recommend in terms of when you're looking at your cash flow is one, move your mortgages onto interest only, and I think you'll find banks will be very receptive to that.
Can you do a holiday with that as well, like a mortgage holiday?
You can, and I think again the banks will be very receptive to that, particularly in the immediate short term, next 3 to 6 months. Okay. And I think that just means talk to your bank early. But they'll be very open to it, particularly people that are facing genuine hardship. But at the very least, go interest only. Just free the cash flow up now before you need it. It'll help you feel a bit better. Go on a KiwiSaver holiday. I went on my KiwiSaver holiday yesterday.
Okay, great.
Right, because we're not taking holidays anywhere else at the moment, so we might as well do it with KiwiSaver.
No, and I'll take your lead because you are the man. Thank you so much, John.
That's awesome. Thank you so much, John. That was very enlightening. And if you are looking for a mortgage solution, go to squirrel.co.nz.